When I'm watching what's going on in the blockchain real estate investing space, I see two separate things going on. Number one, you have people that want to tokenize their properties and put them on the blockchain. And then you have the other thing, that's real world assets. You have the other side of it, of real world assets, of regulated securities going on the blockchain. This video is about regulated securities going on the blockchain, the problems with it, and what the solutions are. There's a lot of talk in the industry of things like stocks, bonds, corporate debt, lending going on with regulated securities, tokenizing those products, and providing liquidity to those markets. The tokenization of everything is coming, you guys. Is going to be blowing up. It's starting to go right now. Real estate tokenization has actually been going on for a little bit. If you look at the non-accredited space, you look at companies like Lofty, there's probably at least 50 of those projects I could point to right now of people tokenizing real estate that you could invest in. But what about tokenizing larger projects? What about, like we said, real world assets of regulated securities? Where can those go? Now, there's a lot of talk on whether or not these can go on Ethereum, but when you talk to the regulated people, and there's been some interviews with these guys talking about would they ever put their stuff on Ethereum? There's some problems with that. Number one, you've got forking. If you have a blockchain that can fork, then you've got a security that's represented, or an asset security that's represented on two separate chains. There's significant legal, regulatory issues with doing that. You can't have the title on the property duplicated in two chains. So if Ethereum forks and you have your title represented on chain one and chain two, which one's the real one? That's a huge problem. Another problem is there's a lot of non-KYC going on regular chains. So regulated securities must be traded amongst known entities. Maybe they don't all know everything about each other, but the platform does. These are not secret people. There has to be KYC and KYB. Know your customer, know your business, for these people to be trading regulated securities. It's very important. In fact, it's critical. And another thing is why regulated securities are going to always struggle to be mass adoption, to have mass adoption on Ethereum or any of those public blockchains that are non-permissioned, is that we don't know where all the node operators are. And there's some of those node operators that are operating in sanctioned countries, for example, North Korea. So a regulated security can't be traded on a blockchain where node operators are benefiting from that, making a profit. If they're from a sanctioned country, that's illegal. And that makes the securities people nervous. It makes investors nervous. It makes everyone nervous to be putting something on a chain that has that risk. So one of the companies that I've been looking at that is solving this problem is Polymesh. Polymesh is a public permissioned blockchain for regulated securities. Now, this is a big deal. It's not a layer 2 on Ethereum. It's its own blockchain. It's basically a layer 1 blockchain, and they're solving a lot of these problems. For example, there is only one chain. You can't fork Polymesh. So there's always one chain. Things are settled on that chain, and it's not going to fork. You can't, because it's a permissioned blockchain. No one's going to be forking that chain. And that's a huge deal, like I said, for regulated securities. Another really unique feature of Polymesh is that the node operators are all licensed financial institutions. So all the node operators are known entities. There aren't any sanctioned countries participating. They're regulated financial entities that are the node operators, and that's super important. And that includes all participants in the blockchain. They don't have to know what's in each other's wallets, but everyone has to be KYC'd to participate. Now, Polymesh is not built using smart contracts. The logic used to create and manage the security tokens is built into the base layer of Polymesh, which allows fast processing and lower fees so it can scale. But smart contracts can be utilized on Polymesh when needed, and that's really important. You can scale the smart contracts, but they're not built into the base layer. The tokenization of the securities, the logic that does that, is built directly into the base layer of Polymesh instead of using smart contracts. Confidentiality. On Ethereum, if I have your Ethereum address, I know what's in your wallet. I see your entire transaction history. I know how much money you have in there. On Polymesh, you have confidentiality. Though everyone's been through KYC, through third parties, everyone doesn't see each other's wallets. They don't know what their transaction history is, any of that. So confidentiality is built into Polymesh. That's really important. Now, another important thing for registered securities is final settlement has to be instantaneous. It can't take time. It has to be instantaneous. If a $100 billion bond changes hands and they book that transaction, they can't be going back later to unbook that transaction. It's got to be instantaneous and total final settlement. On Polymesh, that's basically the way it is. So another issue is going to be when it comes to settlement, final settlement. On many blockchains, on most blockchains that you've heard of, let's just use Ethereum for example, Final settlement is done by the sender, not the receiver, meaning I can send your wallet anything I want. I can send you an airdrop. I can send you an NFT. I can send you a token. Yeah, great. Maybe you receive something for free. If you're a regulated financial institution and you have a wallet address, you can't receive anything into that wallet address. I could send to, let's say, JP Morgan a certain wallet address, an asset, or a security that they're not allowed to hold by law. This is a major problem. There's no way for them to put a wall on that and stop that. So final settlement with Polymesh is great because both parties must agree to final settlement. Also, final settlement is instantaneous. So that is deterministic finality, not probabilistic finality. And that is also something that's really important for regulated securities. Now, here is their website, Polymesh. You can see right here a blockchain for securities. Polymesh is an institutional grade permissioned blockchain built specifically for regulated assets. It has 3.6 thousand accounts, $484 million is staked with 41 node operators. Their coin is PolyX. If you go on to CoinGecko, this is what you're going to see. Right now, today, it is trading at basically at 14 cents. Their market cap is $110 million. They have a 24-hour trading volume of $6 million, and they have a total supply of tokens of 769 tokens. I'm not telling you guys to go buy Polymesh right now. This isn't a buy order or anything like that for you or my group or anything like that. I'm just pointing this one out to you. I think you guys should be watching this. My group's watching this. We're watching this. I think you should be watching this. So look right here at their price chart. Just the most simple token economics, you guys. This is over a year, and I think we're looking for one more project to give them a nice little boost again. They've been up here as high as looks like about 32 cents. And right now, like we said, we're down at around 14.5 cents. So I think we're looking at we're in a bear market right now. Everyone knows that. I think we're going to continue here. I think the real estate market, is the tokenization of it at large scale, is still something that space is we're emerging into that space right now. So I think this is a good, I would actually, maybe if you're really looking to get into this space, it's not like the biggest project at all. But if you were to DCA in a little bit right now, maybe even just watch it for a couple more months. And I would watch all of their information. Look at their Twitter, look at their Discord. I would be following what projects, things are jumping into their ecosystem. I know I was listening to one of their AMAs. It was really fascinating to hear. And the programmer or the guy from Polymesh was saying that for the last year, they were focusing on going after like individual projects. I think they were saying things like, oh, there's a building they wanted to go tokenize or something like that, individual projects. Now they're going after networks, which is going to scale them infinitely. So, for example, let's say you were going to start a tokenization company to be tokenizing many different properties. They're looking to onboard those tokenization projects and those bigger entities that sit in the middle, a lot of times in regulated financial institutions. The trading that goes on, there's middlemen that we don't even know about, and big amounts of money are moving around. Those are the guys that they're actually going at right now, those middlemen networks, to try and really blow up and expand Polymesh. Like I said, this isn't necessarily just a go buy order, but I would definitely recommend looking at PolyX, put it into, save it in CoinGecko, wherever you watch your tokens, and pay attention to it. I think that they're going to scale pretty soon. They're just looking for a couple of really big projects to jump in here, and this thing's going to it's going to shoot up. I know it. Because real estate going on chain, there's just too many eyeballs and too many people talking about it. There are too many benefits to tokenizing real estate for the industry to ignore, and they're not ignoring it. They're just looking for a way to move into it because there's a lot of regulatory hurdles going on, like I said right here. So keep your eye on Polymesh, you guys.